Good morning, traders. I'm new video. Now, in this one, I wanted to do a Q&A session with you. I'm going to cover a number of things. It will include the strategies. We're going to talk about looking at fundamentals, checking out news, not just to see where the news releases are, but more importantly, having a read at some of these articles here. You can probably just make out the flash here. That's my subliminal program down here. I don't know why I've got two on, but that's doing its thing. Now, where was I? Let's stick to the list. First thing and foremost, I want to move your attention to this. Something I've posted on Facebook. For those of you that don't have my Facebook address, I'm going to pin it below this video. You don't have to add friend or anything like that, but most of my posts are going to be public anyway, so you can just come in and have a read of some of the stuff that I put on there. More often I put spiritual stuff. I don't do any trading or trading advice on my Facebook page, so it probably won't be necessary for you to connect that way, but at times I will post these sorts of articles when I come across them. There is a banking crisis that is going to hit us sometime soon. When exactly, we don't know. Could be this year, could be early next year, could be in a couple of years' time. What I am saying to you is that you've got a bit of time right now to prepare for it. Okay, extremely important. If you can think back to 2008 and remember if someone said to you back then, hey, such and such, we believe there's going to be a hit to the economy in, say, 6 months' time, what would you have done then? Now, yes, there's going to be a collapse. Yes, there's going to be a bit of a crisis. Yes, there's going to be job losses. Governments are going to be crying foul. They're going to be, most likely, they're going to be trying to bail out our banks with money that they don't have. They possibly will be printing a crap load of cash. Lots of stuff is going to happen much, 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 much bigger than what you saw in 2008. But having said that, we all know that whenever there is a crash, it can serve as a massive opportunity for those that are in the know. Okay, so here, take it from me right now, I am placing you all in the know. Listen to me carefully. So what the primary issue is right now is that the banks didn't learn their lessons in 2008, and they went out and they lent out a crap load of more money. And who did they lend it out to? Well, let's just say their processes and procedures didn't see any improvement after 2008. So they lent it out to a whole heap of people that possibly you could have said back then that they had no ability to pay this money back. In addition to that, the banks saw the sorts of products that they bundled up and created back in or prior to 2008, and they, yes, initially made a killing out of them, but that was also the root cause of what led to the collapse. Now, the banks saw that, but they understood we can make a lot of money out of this, but they didn't understand the part where the collapse happened. Why? Because the federal governments around the world stepped in and they bailed them out. Okay, back then they probably had a bit of cash to bail them out with. Problem right now is that these greedy banksters, we should call them banksters, yeah? But these greedy bankers, what they have done is they've created more complicated products. What you saw, if those of you that have seen the movie The Big Short, please watch it. All of that is 100% real. Take it from the former financial advisor. I've seen that movie. Carl Bass, this guy here, he's real. Okay, this dude is real. He was the first person to see this many, many, many years prior to 2008, that there was a crash coming. He was the first person to put $1.4 billion against the housing market. So he effectively shorted the housing market. Other people caught on and they did the same thing, and these people made an absolute killing out of it. Yes, that's not a good thing, but they did. What they're doing right now is they've put hundreds of millions of dollars against the yuan, the Chinese currency at the present moment, because the Chinese banks, they're badly in trouble. Now, going off the article itself, don't limit this to China itself. Okay, know that a lot of countries around the world are reliant on China, but also know that many of these countries have banking problems themselves. Here's another problem on top of that: that since 2008, central government debt has pretty much exploded. Not almost, it has exploded. It's more than doubled in most countries. So that's not going to be good for us when this collapse comes, because look at it this way: if the banks have gone into multiple 100% of the debt that they held back in 2008, so have the federal governments. At the same time, that would mean that taxpayers would need to fork out multiples of what they did back in 2008 in order to bail out the banks or recapitalize the banks in this instance. Now, when the governments are quite heavily in debt, well, where's the cash going to come from? And most of the countries around the world, one of the biggest issues is that a large part of their revenue or capital works revenue is now going towards repaying some of that debt. Who owns this debt? Well, in most cases, probably the central banks, the Rothschild banking institutions that own it. It's a very, very stupid system, yes. I'd say either the politicians or the lawmakers are too blind to see it, or they're getting paid off. Who knows? But this video isn't really about that. I'm just saying to you guys, be aware that there's something coming. When the collapses happen, companies will fold, and as a result of it, job losses will happen. Costs and price of goods will possibly skyrocket. Most countries may enter into a recession again. Again, we don't know when this is going to happen, but instead of being fearful about this, here's what I'd like you to do. I want you and your significant other to sit down, your family, sit down, have a chat about where you guys can start saving, where you guys can possibly look at minimizing costs in your household. If you don't have savings for at least 3 to 6 months, start saving that now. Back in the day, when I was an advisor, I used to say to people, pretend that your spouse is pregnant. Or yeah, just pretend one of you is pregnant. And so what you would do is you plan for when your wife would go on to maternity leave. Okay, or if you're the woman, that you would go on to maternity leave. And so then for a brief moment, say 3 to 6 months, you'd be relying on just one income. So what you would be doing beforehand is starting to save a whole heap of money, just so that you have this cash sitting in reserves when the shit hits the fan, literally. Okay, so start saving, start doing all those things. Absolutely master learning how to trade binary. A lot of you have been asking me what happens to brokers, what happens to forex brokers and binary brokers if this collapse happens. Well, a couple of things. One is if they're a reputable broker and they're holding your cash in a big bank account somewhere, if the bank is still good to go, then we're safe. Two, as long as there is not a fiat currency collapse. For those of you that don't know what fiat currency is, it's the currency for most countries right now, which is just paper. It's not backed by anything, not backed by oil or gold. So as long as there's not a fiat currency collapse, we still have a currency exchange and a currency market. So we should still be good to trade. But in any case, between now and then, you possibly still have a good 12 months or more. So utilize this time in being able to make really good money out of it. Okay, and when you do, pay really good attention to this here. If you go to investing.com, for example, keep an eye on what the present gold price is. Keep an eye on what the oil price is. Keep an eye on the US dollar. More importantly, keep an eye on the US economy. Okay, pay attention to when the lawmakers over there are talking about the strength in the economy. Pay attention to when their Federal Reserves or Treasury is talking about interest rate rises and things like that. Why? The reason is this. the US dollar always negatively correlates with commodities, so gold and silver. So if you see there's going to be strength in the US dollar, what you're going to do is start buying gold. That means to say gold prices will hit all-time lows. It already has, but all-time lows. Start buying gold, because when collapses happen, gold prices or silver prices, commodity prices in actual fact, would skyrocket. Okay, so that's one way of making money, but the other thing is that you'll also have security within that. When price is low, it's time to buy. The other thing is, when collapses happen, you want to be mindful of stocks that the world will absolutely need. So you're looking at essential stocks, companies that supply water, oil companies. You're looking at companies that mine for gold and silver, and all the rare minerals. Look for these things. Start studying them now. At some point, I may do videos on this and share stock information as well. But start looking at some of that, start researching some of that, and when the shit really does hit the fan and a collapse comes, what's going to happen is all the values of stocks will come down as well. When stocks come down, the values come down. It doesn't actually mean that the value of that stock has fallen. It just means that what someone's prepared to pay for it right now has fallen. And so when you have some cash sitting on the sidelines, you're in a really good position to be able to buy them. The other thing is, for the time being, when you're looking at these stocks, for example, gold and silver miners, if at any point in time you see that the US dollar is going up, the value of these mining stocks will come down. Okay, if they do and you've got a bit of cash, start buying into them. Why? Because when a collapse happens, those stocks will absolutely skyrocket. Okay, keep this in mind. When there is a collapse, not everything falls. The stuff on the other end of the scale, which is what the world will be reliant on, that absolutely skyrockets. So understand this: when US dollar goes up, gold and silver prices come down. When US dollar comes down, gold and silver prices go up. Alrighty? And also, if you are in countries where, for example, Australia, the pound for us, £1 is almost $2 Australian. When we went to India, if I was exchanging an Aussie dollar, I only got, I think, 45 45 rupees for the $1 Australian. I believe it was 57 rupees for $1 and it was something like 97 rupees for £1. Now, for those of you that are now diversifying your binary options or your Forex trades, guys, if you're in a country apart from probably Britain itself, have one account that trades at least in the British pounds, because that's going to help you. You'll end up getting more profits that way when you bring that cash back over into your country. So start doing things like that. Okay, the other thing I wanted to talk about before I get on, so diversification. You're looking at not only trading binary, you're looking at trading, hopefully down the track, Forex as well. You're looking at trading Nadex. You're looking at possibly even setting up businesses, something online, something that you think people will still need down the track. If you're interested in photography, certainly take great photos. There are websites that online that will buy photos from you. Think about what people will need. For example, if you're going shopping, someone's pushing a trolley around, maybe you can ask them for permission, but you can take a photo of a person pushing a trolley around, or a plane's photo, or whatever it is. And if you're by the beach somewhere near the airport and you've got a great view of planes flying in and out, take some of those photos. There are sites out there. When you put it up in high definition, you might even have the airline come out and say, "Hey, that's an amazing photo. We'll give you 10 grand for it." I know people that have had this done. I can't remember what the photos were. I tried to put some photos up 2 years ago. I did it from my iPhone. They came back to me and they said quality wasn't sharp enough. But if you have a hobby, you got a great camera, you know how to take good photos, certainly do that, because you can make some money out of all of that. Look into your hobbies as well. See what there is that you could possibly transform from it just being a hobby to possibly something that's going to help you earn some money. If you've got some rare talents, maybe write an ebook about it, sell it online, do something along those lines to secure yourself. So say for instance you lose your job, besides possibly trading binary or Forex, that you have something else that you can do out there. Okay, so certainly diversify, set up businesses, do whatever is necessary. Have a chat with your significant other. If you guys have ideas, you don't know what to do about it, send me a message. I'll have a chat with you and I can possibly guide you in the right way as well. Buying gold, we've already covered that. When the US dollar is strong, gold prices will be low. Look into buying some gold and keep that aside. Uh, okay, now let's jump on to market movements. And quickly, before I forget also, look, I'm getting a lot of questions from you guys about various strategies and whatever else that I've got already on my channel. And look, I don't mind helping you guys out. I don't mind sharing information. I absolutely don't mind questions, but please just make sure that those questions are not repetitive. If you're, for example, looking at the EMA6 strategy, watch both videos. There's an update video there as well, and then certainly look at the comments section under those videos, because a lot of people have asked questions and I have answered, other people have answered on there as well, and I can tell you 110% of the questions that are coming through right now, the answers are already in the videos, the answers are already in the comment section. So please pay attention to all of that stuff. It will help me then answer, or free up my time to answer questions from a whole heap of other people, because I do get a lot of questions. And for those of you that are sending in genuine questions and I haven't replied back, please just know that I've received probably a ton of these. Certainly resend me your messages or your emails in a couple of days, and I will get onto them as soon as I can. But so again, yes, please have a look at these videos. I had a guy today ask me if I could make a video about support and resistance lines and like how to draw them in. It's here. It's already there. So please pay attention to some of that stuff. Okay, that's it. And I will get on to other stuff. With the newbie video series that we did talk about, that hasn't moved much at this stage. The reason is that I've got a new project that I'm on right now in terms of trading. It's where I had a chat with this guy that trained me how to trade Forex back in about 2004 when I was a financial advisor. And I had a chat with him a couple of weeks ago about binaries in particular, and how to just do pure price action using all the Forex information that we've had of the past. And one of the things he directed me back to was the fact that maybe I should just forget the strategies for the time being. I should just apply Forex knowledge to trading binary, meaning to say trade binary like I would trade Forex. And so that's what I've been working on right now. It's quite interesting, and I'm about to share some of that information with you now. Okay, so let's jump onto that. Where's MT4? Okay, let's go here. All right, so I'm going to jump onto the 15-minute chart. Here's what I want to show you. I've done rough drawings of where the Asian sessions started, where New York started and finished, where London started and finished, and the previous Asian started and finished. Now I want to run you through this. Whilst you're looking at the charts, I do want to let you know this. One, don't apply too much pressure to yourself, okay? There are times when I lose trades as well. I try and maintain 100% in the money rate. When I'm speaking of that, I'm talking about my live accounts. Okay. Yesterday I did actually lose a live trade, which was on the Euro USD Frankfurt strategy. 15 minutes before, it was what wasn't normal about this was that there was a clear sign something was definitely pushing down on the the euro. It was spiking up. It was behaving like it had an epileptic fit, where it was trying to jump back up. There was one candle that spiked up and then was spiked back down again almost instantly. I lost by a couple of micro pips on that one. Now, the good news from that on is that yes, I've presented this as a Euro USD strategy, but when I clicked on other currency pairs, probably have 4 or 5 of them: AUD USD, USD JPY, Pound USD, AUD JPY, and I believe there was one more. Did I say Euro JPY? All of these pairs behaved exactly the same way that I would have expected the Euro USD to behave on that day. So what you see is that market comes down around the 40-minute mark, and then down the bottom there somewhere you'll see a few candles. Okay, so it's not like where it's just an instant jump up. With the Euro USD yesterday, there was an instant jump up for about 3 candles. I did not follow my own criteria there, and I jumped in quickly because I was kind of surprised that this was starting to spike already. But here's the thing: you want to wait for a few candles going sideways, because that is an indication to you that the market is about to reverse, especially if there are wicks on the bottom of it. When you see wicks forming on the bottom of some of these candles, candles consolidating for about 2 or 3 candles, you know the market is about to spike up. And when the last candle before the spike happens, you'll see it. It'll be a smaller, possibly a white candle or green candle doji, and then you go in at the very end of that candle, so the 57-second mark. So what that means is you'll be right at the bottom of the next candle, and then that's when the spike happens. The usual picture is that you'll see it spike up for about 3 or 4 candles, and then it will start to consolidate. So there'll be like a flag formation that happens. I don't have it here in front of me right now, but that's generally what you will start to see. And that is an extremely safe trade. So demo this on all those currency pairs right now and make sure that the same pattern happens for all of them. But yesterday, about 4 or 5 of these had the perfect patterns forming, and I sat there looking at this and I thought, okay, that's a paid lesson that I just had. That it's not just the Euro USD that does this. Someone did ask me about it, but there you go, that's your answer. Pay attention to that. Now, here we go. We're going to look at the market sitting in front of me over the course of 2 Asian sessions, or 2.5, one London session, one New York session. And here's what I want you to look at, okay? Every session, what you're going to find is that there is some degree of consolidation at the beginning or at the end, and then you're going to see a false move by the market makers in one direction. You're going to see a spike, and then most likely like a shooting star or a hammer. Don't focus on those terms. I'm just going to show you what you're looking for, and then that then follows a after that, what follows it is a trend in a specific direction. Okay, let's just grab a sip. Okay, so this was yesterday's Asian session. Market came into consolidation after New York, established its initial high of the day, then went down, and the market makers created its false move. The false move came after it broke through its initial low of the day. Okay, so it broke through. What would have happened is this. A lot of Forex traders most likely would have seen this, and usually market does move in waves. Okay, so you could see this first wave, second wave, third wave. By the time most traders, Forex traders, started paying attention, it was probably down here somewhere. Okay, what they would have done is said, okay, what we're going to do is we're going to do a short trade on Forex, and we're going to establish maybe a stop sell somewhere here, a stop loss. Okay, what happens is that the market makers, they're well and truly aware of where you guys are placing your trades and where your stop losses are, simply because they have the necessary software to be able to see this. And almost all of us eventually through our brokers as well, if they're placing your trades live, or if you're using the MT4 platform to place your trades. All of those trades get shown in a portal to the market maker, so they are well and truly aware of where all the cash is sitting, where the stop losses are, and they will move the market in the direction that they are willing to, in order to either bait you or to completely wipe your accounts out. So this is their initial false move to say to people that we're going to go south now, and everyone, and majority of the retail traders, which would be the 99% of them, would follow suit. What the market maker did was spike it down, pull back, and this would have been, hey guys, I'm going down, but no, I'm not anymore. And then here's the stop losses for them somewhere here. So not only did these people possibly lose, they're probably stuck down here somewhere. The stop losses came in, and they possibly made a loss there because that would have triggered them out of the trade. Market then pulled back up. Okay, when you see this happening, you know that this was an actual market maker move. You're looking at big spikes like this. Notice how a big spike, not just little ones here, a big spike, market pulls back. Market's not going to come back down to this point again. So if you're going to use this as like a support line, know this: market will not come anywhere near this. So if I dropped a horizontal line here, well, it did come close, but it won't break past this point. Okay. Reason is there's possibly a lot of clients now that would have gone long, that have stop losses here. What would have happened here would have been most likely that people that went long, okay, the market makers would have seen that they would have had possible stop losses somewhere down here. Okay, so that market came down, hit it, triggered them out. Why? Because if they carried them forth with their climb, well, what that would mean is there's going to be a transfer of wealth from the market maker's pocket to the trader's pocket. They don't want to do that. It's exactly what happened here. Spiked the market back up, pulled back. I doubt that there were any Forex traders or big ones trading here, so that they didn't actually see it as a need to come back down and to do further triggering out of stop losses. Because here's the other thing: say for instance you've done a long trade here in Forex, and you've got your stop loss, a tight one somewhere down here. Now if the market maker did not come down and hit you here, you would have made a nice, very comfortable profit, because what you're waiting for is for the market to complete its trend and then start to consolidate. Okay, there's always going to be a period of consolidation for at least an hour or so. So you know when the market starts to consolidate, it's going to head, that's time for you to exit out of that, because chances are it may head back down again. Also, here's the other thing that you want to pay attention to. If the market is moving in waves, if there are no specific waves, then chances are that that was just an initial fake spike, or the market is going to do something else weird that you might not be aware of. So look at this. You could see this as waves. You could see this as the first wave. You could see all this up to here as the second wave, and this is the third wave, right? When the market goes into consolidation, that's it. You're done for the day. Here's the other thing that I want you to be aware of. Session opens, consolidation, false move. Market's giving you an indication that we're going to reverse back up now. Market trends all the way up. Consolidation, goes up, spikes back. Consolidates, goes up, spikes back. Always know that this sort of behavior tends to happen towards the session end. Okay, session end or session start. Don't get caught up in that, where you're looking for some sort of other odd behavior. There will always be a false move. There will always be a trend. There will always be a consolidation before and after a session. There will be the rare time when there's no consolidation at all. Okay, look at this. London opens. This spikes up. Here, that's the false move that was made. Spikes back down. You're looking for this behavior, whether it's a shooting star or a hammer. That's what you're looking for. And then notice, if you're a Forex trader, here's what you would start to do. You'd wait for this to come back down, this to happen where this does not break past this point. Also, you don't want these two to come anywhere near and break past this point. To me, that's saying that market has made its initial high of the day, and it's going to now head in the opposite direction. It's made its initial low of the day, and it's going to start heading in the opposite direction. Here's the sort of thing that you can use now to trade binary, because when you know this is done, it's done its spike and it's going in the opposite direction. Well, one thing is you could possibly do your first trade in the opposite direction. So if it's a 15-minute chart, you see this happening, execute a 50-minute call somewhere around here. Test those sorts of strategies, okay? They will make sense. The other thing is that you can do is when you start to see the market comfortably trending up, well, you know that at least for 2 or 3 hours or so, market's going to head in that direction or continue to head in that direction. Now, if you're someone that wants to take a few trades continually, if you're somewhere here, hey, certainly at the open of the candle or at any pullback, take a trade. I would do it at the open of the candle, not just the pullbacks, so that you end up in the green more often than not. But if you can take maybe 3 trades somewhere during here, they might be 3 good trades. The other thing is, if you see this sort of behavior happening, maybe you can say, okay, 15, 20, 30 minutes down the track, I expect the market to be somewhere. Or you could just do maybe a long 2 or 3 hour trade in binary. Certainly use that for Nadex as well. Go in and do 2 or 3 hour trades. Notice how there's a massive difference here. For those of you that's trading Forex, look for these movements. In the Asian session, the movement may be as big as 50 pips. Let me see. From this point to this point. Yep, 53 pips. You wouldn't be trading there exactly. You'd probably be doing somewhere here to maybe here or so. So you're able to pick up, I'd say from this point, maybe this point. There you go. That's 36 pips that you can pick up. Now, the big moves that tend to happen during London and New York, so you could possibly pick up maybe 100, 150 pips around that time or more. But Asian session certainly is small. Now let's go back into London and New York. Let's have a look at what they did. Notice how false move spiked to the top. These candles didn't do or come anywhere near this again. That means heading in the opposite direction. And then it for the next, let's count these, 1, 2, 3, 4. It's about 2.5 hours or so. It trended south. Look at what trades you could have possibly done here. Okay, notice how it came close to but didn't go anywhere near the actual low of the day that was spiked and created during the Asian session. So it goes back up, goes into consolidation just prior to New York. Now here's the thing that I wanted to mention to you guys. Just like how the Euro USD currency pair, pretty much all of them now, behave prior to the open of Frankfurt in London. Notice how the market starts to fall for some reason prior to New York coming into play. Now, usually what that means is that there is a lot of US dollar backing that flows into the market around that time. So naturally the euro is going to take a bit of a fall. A couple of years ago, Citibank actually did release an article about this where they said that if you were in the habit of selling the euro before the New York Open and then rebuying it at the end of New York Open, over the course of a year, you'd be, and if that's all you did, your account would have been up 9% by the end of the year, because this behavior is just so common. So see if there are possible trades that you can take prior to New York Open. I have looked at it. I've done a number of these trades, not too many of them. They've won. What I used to do was look at taking entries for about half an hour or an hour or so. I'm not sure if this happens every day. Usually I'm asleep by then. But certainly look into it if you are trading the overlaps. Now somewhere around here is the actual overlap. Notice how spikes candles are much bigger. This is where on like shorter time frames, 5 minutes or 1 minute, people get caught up. Don't get caught up with this. If you're a new trader, certainly watch the overlap between London and New York, though don't jump in and start doing your strategy, especially those that are trying the EMA6 strategy. I think it was AJ. Mate, that was possibly the absolute worst time for you to be trading EMA6 strategy. You do need more of a ranging market, or like a very slight trend. Nothing that's going to be that's going to be with a lot of volatility. Okay. Now notice how when New York came in, this one did spike, market pull back, but then this was the actual the new low of the day that New York created. Notice how as soon as this massive spike comes, after that the market does begin to trend up. So there was a period of, and note this as well. Where is this? After the initial spike, there may be slight consolidation. So this spike, slight consolidation. What you're looking for is either the next hour or so, prices didn't come back down here again. Okay, with this one here, you could have seen this. You're waiting for this to. You probably should have waited for about an hour or so, but you're waiting for this to do what it's doing. Let me get rid of this mark so you guys can see this better. Okay, so you're looking for massive spikes like this. Wait for a slight consolidation. Wait for the trend to happen. Trend happens. Um, Market hits its high here. Then notice how it went and hit its high here again. Why? There was possibly a lot of forex traders that probably would have seen a lot of this behavior. When you see a lot of wicks in one direction, that possibly means that the market's getting to reverse and go in opposite direction. So when this happened, there might have been a lot of traders that would have said, okay, we're going to go opposing direction. Now, where they set their stop sells, the smart ones, the 1%, would be higher up than the actual high, the peak here. All right, so if this was the initial high of the session, so they probably would have looked at all of this and they set up their high here. Guess what the market makers did? They pulled the market down slightly, pushed it back up here. So you can see the wick, but what they would have seen on their screens is that there's a whole heap of people that have shorted the market now. They shorted the Euro USD pair, but they were smart and they set up stop losses up here somewhere. Okay, but these guys said, well, we're not having that because there's too much money up here, and if I take the market back down again, well, maybe my equity is going to be low. So what they did was they spiked the market up again. All right, here's, remember when we were talking about the 15-minute reversal strategies? Think along these lines, is to say, if I've drawn my lines here, why would the market spike back up past that line? Here's the reason why. Okay, so you're looking at these points here and you're saying, market's about to reverse. These are signs that the market's reversing. Chances are there is going to be a whole heap of traders that are now establishing stop losses here. So what the market's doing, so the market makers are doing, they're going to make sure that these guys are not going to carry forth with their trades. Otherwise, a lot of transfer of equity is going to happen. What they do, they will stop them out. The terms that are used in this regard is a stop hunt. Again, I don't want you getting confused with terms, so I'm just going to say it's stop losses that people set up here. And as a binary options broker, you can utilize this because you know market's reversing. All of this you've seen, and all this behavior here. If you're certain market's going to reverse, maybe you can set up a resistance line here and then maybe give it a bit of a buffer. Okay, so when you then get to see this and the market does go past that, it's a long candle, certainly something's going on there. Do a reversal on that, comfortable trade. Notice how straight after they hit all the stop losses, they came down and hit the market with a long red candle. Okay, so this is towards the end of the session. Here's the false move that goes up again. Market went up. That's the initial now. I'm going to drop a line there. That is now the initial high of the Asian session. Now, here's what I'm looking at. This became the initial low. Look at all these candles down here. They're behaving weird. All right. Now, this is what I'm going to pay attention to around, it's 10:10 my time, around 11:30 or so my time. I'm going to come back to have a look at where the move has been. I'm going to look for a spike, something along these lines. I believe the New Zealand session began here somewhere, because this is to do with Sydney. So it's around here somewhere. Notice how all of this happened. Notice how all of this is happening. At some point, there's going to be a spike somewhere. That's what I'm going to be waiting for. Right now, candles are up here. I'm thinking the spike may be down up here somewhere. Overall, I believe this is going to be... This is going to head down for the next couple of days. Could be wrong. Market makers might change their mind. But that's what I'm looking at. Once I see the spike, I will want to trade a reversal on that spike. It's got to be the absolute high or absolute low in order for you to be able to trade it that way. And then the other thing is I'm going to look for the establishment, of one of these trends. And then you start to work out how you're going to trade those trends. Okay? What else was there? Where's my... EMA 6. Look, I'm getting a lot of people sending me messages about the EMA 6 trades. What can I say about them? Look, the safe ones I've found come in quieter times. Second half of... not second half, sorry, 2 hours into London session when the news releases are quiet. Usually when you see some degree of consolidation happening in the 15-minute chart, you can jump onto a 1-minute chart and trade the EMA 6s. The second half of New York is usually good as well, especially around here when the market, there is some degree of consolidation. For those of you that are trading Asian sessions, I believe when your brokers allow you to do the fast trades, certainly here right now, let's see if we can jump onto a 1-minute chart. Yeah, see, like I look at a 1-minute chart right now, it's not my cup of tea. It's really not doing anything that I would enjoy. I like this sort of movement. So although it's a nice strategy, you can't do it all of the time. Actually, like with all strategies, you can't do it all of the time, and that's why I'm encouraging all of you to do naked stock chart trading as well, because within that you might be able to see nice setups. You know, like these spikes happen, for example. Now that you've got a better understanding of why they spike, maybe you'll be able to develop a way of trading them. But be versatile, be dynamic. You can't look for just one strategic setup constantly. Okay, market makers are too smart in regards to that. They're not going to show you the same setup every single day. There is a process the same way every single day and every week, but it's not going to happen at the exact time. So like the Euro USD strategy, some people are blindly, you know, if you guys are telling me you've been doing 2-3 trades of the Euro USD strategy every day, and some days you get 3 wins. Yesterday someone I think said he won the first one, lost the last 2. Mate, you're missing the whole entire point. You're not meant to be doing that. You're looking at the market and you're watching to see if you've seen clear signs as to the market making a move in the opposite direction. If you don't see it and you're just taking, like, you see a slight move and you're saying, I'm going to take a trade in that, you're risking your losses. Don't do that. Losses will come. Yes, like I said, I had a loss yesterday after a while. But how I approach my trading means I have very few of those losses when it comes to binary. I'm going to say this as well. Binary, in my opinion, still, after many years of trading Forex, binary is still much harder than trading Forex. Why? Because if I take you back onto a 15-minute chart, this is what I want to show you. When I see this sort of behavior happen and then this happen, I know that the market is going to start reversing. Okay, I could take a Forex trade. Binary-wise, I don't know if the market's just going to consolidate for a while before it jumps up, or if this is going to happen, it's going to go up and it's going to come back down again. So say for instance, where was it? Let's see an example. Say for instance, I do this. I see this, and then the next candle, I say, okay, this is definitely going to jump up now. Somewhere in the middle of this or towards the end of this, I do maybe a 1 hour call, right? Even if this comes down. So for that first 15 minutes, this falls. Second 15 minutes, it falls. Third 15 minutes, it falls. My hour ends here, right? Forex-wise, I know this thing's going up. But if in binary my hour ends in here, although the market does go up eventually, I've lost that trade. Right? Same thing here. If I see this happen and then here I take this trade and I say I'm going to do a call for an hour. 1, 2, 3, 4. Say for instance the market maker said, hey, there's a whole heap of cash sitting here. We want to stop all these people out and grab some of that. We're going to spike this down a little bit further. And my entry is here. That comes down, hits me somewhere here, and I end up losing that trade. That can happen with binary. Although what I saw directional wise was accurate, when that's going to happen and which manner in which it's going to happen is the problem. So that's what we're trying to figure out in binary, and that's what I'm doing right now. Part of my project is to be able to apply Forex terms, Forex knowledge to trading binary. Okay? I hope you guys have understood that. So what you're looking for here, initial high, initial low, and then a false move. So it's going to be a spike to one angle, towards one side. Once you see that spike, you can possibly do a reversal on that spike. You will also, you might see where the market will revert back and try and test that area again slightly. If it doesn't break past that point, then what that means is there's going to be a trend developing. That's when you can start to say, hey, can I trade this trend? That's when you can say, okay, if I forget all of this and I wait for this to happen, then 1, 2, 3, these things do happen. I can say, okay, hold on a second. This trend has started, or especially when this breaks through, this trend has started. Maybe I can do an hour call or something here. All right, so that's the way you want to approach this. Certainly do that. Next thing, what's next? 2-minute reversal pattern. Okay, some guy messaged me today. No. Let me jump onto, okay, where's AUD USD? Okay, let's go on here. Okay, so this is what I was saying to him. He did say to me that he saw it in that clock video, and he was testing it. Guys, keep in mind, when I'm talking about these strategies, I'm talking about maybe 2 or 3 trades a day. I'm not talking about anything more than that. So you've got to be very, very picky with how you're going to trade it. Here's what I look at. I'm looking for a downtrend initially. The other thing I'm looking for is the behavior of these candles, so these waves. I'm looking for these waves, this behavior when it comes down to the bottom Bollinger and then shoots back up towards the middle Bollinger. Okay? When I see that, I want to see a nice move. I want to see this sort of pattern where this is a high bar reversal pattern. Okay? I don't do this. I don't like seeing that. Meaning to say where this red candle is much, much bigger than this white one. I want to see this. This is an inside bar reversal pattern. I'm kind of not very, I'm not a big fan of these ones, but you can do that. See how it's just slightly above the middle Bollinger Band? That's when you can see this happen and say, okay, I'm going to take a 2-minute reversal. Yes, you're going to have a bit of a heart attack when market bounces back up. I do 2 minutes because chances are we'll push back down again. But within this, you should be able to pick up like 2 comfortable ones, hopefully. Again, let's go back to the 1-minute chart here, see if we can see this. Look for a downtrend. Look for a nice, steady downtrend. The other thing I want you to be aware of right now, these are quite large candles, especially during the Asian session to do with Euro USD. And for those of you that have had really bad trading results in the last few days, it's okay because the last few days have been crazy. It actually has hit a lot of people quite hard. That should be used as a lesson, a paid lesson on your ability to be able to pick perfect trades. Okay, know that markets are going to do all sorts of crazy things, but when you've got an idea of the overall movement, what the market is doing and what you're looking at doing, then from that point on, you can then create specific setups and trades for yourself. Okay, what's next? Support and resistance. Look, there's a video already there in my channel, but here's what you're looking for, and start thinking along the lines of, if there's a reversal that's going to come, think about, if you were a forex trader, a retail trader, what would you do? In most cases, you'll say, okay, I'm seeing that there's a reversal coming, I'm seeing all these areas here, let me draw in some lines. See, all this is a resistance zone. So you can say, hey, that's a support zone right there. What you're looking to see is why. Why would the market go past that point and reverse back? And you'll probably be thinking, well, this is a reversal point. Forex traders are most likely, they've taken short orders and they'll have their stop losses up here somewhere. Where's going to be a comfortable point for the market to come and spike, but not for the body of it to sit, simply because it would be too much for the market makers to give away to, or give back to, the retail traders. And you can say, okay, well, let's create buffers. Let's look at this point and maybe somewhere beyond this point. So when the market comes back up, hits past this point, and you'll be like, okay, if you want an additional buffer, you probably create one here. And you'll say, well, that means that there's definitely people up here that's going to be saved or stop lost. And you go, okay, suckers, you guys are doing that. I'm going to reverse if the market comes back up here. This dynamic trend lines, that's called the SS True channel. It's a waste of your time. Why? This will change. This didn't exist when this was going up. It's dynamic, so it will change only when it's created something. If that was somewhere, it might have been down here at that point in time. You don't want to be trading relying on that. Okay, don't do that. Look at the present candle, draw lines in. I'll draw this one in here and look at why it's bouncing. It's trying to push down. Maybe this is part of the false move, we don't know, but we're waiting for a spike. We're waiting for a spike, something along this line, something along these lines, something along these lines, something along these lines. There's going to be one or two throughout every single session. Look for them. Look for where they are. This was the session low for Asian. This is the session high for Asian. This is the session high for London. Where is it? This was the session low for London. Session high for, no, actually no, this is session low for, because New York was here somewhere. So session overlap for New York was here somewhere. Session low for the New York session, session high for the New York session. There's going to be these spikes. Look for them. If you can find them, you can possibly trade the reversal on them. If not, use that to find the trend that's going to happen after that. Notice spike, trend, spike, trend, spike, trend. If for a binary options trader, the longer term trades, and especially for those of you that are trading Nadex, this is a good time to be trading. Okay, look for those patterns. See these W forming here. That's a multi-session M forming. That's an M forming right there. Actually, these are clear moves. You could almost count that as a double bottom. And then the market did the fake out on the double bottom. Okay, next. Emotion. Look, a lot of you, I think, getting more emotional as losses come in, including the ones on demo. Know that one thing right now at this present moment, you're very heavily reliant on wanting to make this work. So the emotion is natural. It's going to be there. Listen to the subliminal at least 2 or 3 times a day. That will help you grab control over your emotions. But sometimes this is what I do. I might have a movie playing in the background somewhere whilst I'm doing this. So for those of you that want to find sites, vumu.com, no, sorry, vumu.ch, VUMOO.ch. You can watch free movies on there. Click on the movie and then scroll down and click on the play button. Don't log in, don't sign up. Click on the play button, another ad page will launch. Exit out of that ad page and then click on the play button again. You'll be able to watch absolutely new movies that are playing at the cinemas for free. I do that all the time. Thank you to my nephews for that. Do that, watch a movie, watch TV, play some music in the background, have this on, dance in front of your screen if you want to, exercise, drop and do some push-ups, whatever it is. But it's where you are waiting for the setup to come to you, especially when you're looking at the markets and you're able to tell why the market makers have done what they've done. You're in a better position to be able to trade. Now with binary, you're looking to scalp this market. You're looking at this and you're saying, okay, I'm getting a better handle of how the market makers move. So you're waiting for key signs. We're waiting for this. This could have been the initial high. We're waiting for something here. This could be the spike that we're waiting for. If this comes back, ends up tiny, like a shooting star, a hammer, we're good to go. I always get confused between the two, the shooting star and the hammer. This move usually happens in the first 4 hours of the day. Sydney only kicked in 2.5 hours ago. So at some point the move will be made, and that's going to be the false move against which the market is going to move. So let's watch this for the next 2.5 hours before I end the video. But generally speaking, that's what you're looking for, people. It's get a better grasp, a more in-depth understanding of why the market moves the way it does. Understand that, especially like in Forex, when you're taking a position, the entity that's taking a position on the other end of you is the market maker itself. Okay. What they are going to do, they're going to dangle a carrot in front of you for a while by showing you the patterns in the market. They're going to do all of that. Then false moves are going to happen. But know that they know truly where you've placed your stop losses, the direction in which you're trading. So they will give to some and they'll take away from others. What you want to do is be the one that they're constantly giving to, because you're not falling into the same bracket or even positions where they're going to take away from. All right, so have a conversation with yourself whilst you're watching the market. Understand that market makers are making some moves, and understand that retail traders are looking at this and taking positions based on those moves. If you are trading alongside the retail traders, you're going to be screwed. If you're trading alongside the market makers, you got no chance of losing. Okay, I'm not seeing a pullback on this one, so it might not be this. Chances are the market may head down 1 or 2 bars and then pull back. We shall see. The low of the day established, New York was here, so I'm going to draw a line here and see what this does in relation to this line. Right. Look, last thing that I'd like to mention, we're experimenting constantly. We're looking to see what the market makers are possibly thinking about and doing. You want to see clear signs, and over a term, maybe a few days, maybe a few weeks, maybe a couple of months, you'll see patterns developing. This whole world, this whole universe is created on patterns. Okay, so your mind, how we work as human beings, patterns. You look at water, molecules of water in a microscope, you'll see patterns forming in that. So patterns exist everywhere. these patterns exist within the stock markets as well, and share markets and currency markets. It's all there. That's what we're looking for, clear patterns. Okay, look for moves at session open, session close. Look for a trend that's going to happen almost every single session. Look for spikes, so you'll have a session high, session low. Look for those spikes when the market is creating those session high, session lows. This is not a session low. This is the present session low, yes, but this is not the spike we're looking for, okay? When you see a spike, you will see a pullback. This, in my opinion, is the market maker right now. Either these guys have gone up and they've created a session high and they're going to trend south, or what they're going to do is this may be a false move that's going to happen, pull back and then climb for the Asian session. All right, so we're not trading these right now. What we're doing is we're sitting back, make yourself a coffee, watch this and see what these guys are going to do. Wait for a clear signal. With all your trades, including the Euro USD strategy, wait for a clear signal that the market is about to do what you think it's about to do. Don't just jump in because you said, hey, you know, in his video, Shiva said that this is what the Euro USD pair does every day. I'm going to just jump in here now at the 40-minute mark. Doesn't work like that, guys, because if the market makers did everything like clockwork every single day, they'd all be bankrupt and we'll all be billionaires. They keep changing that slightly. So a climb may not happen until the 49th minute instead of where I say, hey, it happens on the 42 minute. Or it may not happen until the 56th minute because that's how they control it. Yesterday, for me, it was a very, very tiny, very close loss simply because market makers held it down. With all the other currency pairs, I looked at it and I could have cried because I thought, wow, all of these currency pairs behaved exactly the way that I wanted it to behave. But you're going to have moments where those losses will come. Okay, that's okay. They're paid lessons because you will always recoup them. Keep this in mind as well. The more you look at this, the more you study this, the better you will get. Think about it this way. A lot of you have said that by watching some of my videos, these things have made more sense to you. Thank you for your messages. I love them. Please keep them coming. Even the YouTube comments, I love those. I do read them. I do absolutely love them. Thank you. They are an encouragement for me to keep sharing. That's what it's all about. I'd like to make changes into your life. No one did these things for us. So I'd like to do these things for you. But keep this in mind also, that you will get better at it. Constantly improve upon your ability to take better trades, and that's all you're doing right now. So if you do take a loss, study that hard. Understand why you made the loss. I understood my loss yesterday. One, I jumped in too late. I jumped in at probably 4 seconds past that minute, and then my broker applied another additional spread to that, which then I spent a bit of time studying because it was a good probably about 0.6 pips. So that I wasn't happy about that, and I believe that's why I partly lost the trade. But certainly pay attention to all of those things. Note here, this is part of the false move, guys. This is not going to be this. This is possibly where they're just trying to encourage traders to take positions. That may lead into consolidation, I don't know. 1111, good sign, angelic sign for those of you that know what it is. Okay, so I'm going to close off the video on that note. Certainly, I hope you guys have a better understanding of how the market works. Certainly ask me any questions you can in the YouTube comment section. And please heed some of that advice about the impending collapses that are going to come. All right, cheers. Have a great day.